Hi everyone, I'm Paul, and in today's video I'm going to do a little bit of a forensic exercise on the bottom that we saw in Bitcoin. So I totally missed that trade. I think like a lot of other people, I was already fully invested and a little bit scared about loading up, and so I was really watching the market and I was probably looking at the wrong things, and so I completely missed this setup. And so this is a way I normally look at entries, and as I said, unfortunately I completely missed it. But I've now found it since going back and looking at my charts again. And so I think going back and looking at that setup is helpful, just because it's a really actually quite a clean setup given the circumstances. But I think the takeaway lesson from it is you've just really got to fade all of that noise that you get from, you know, the market and Instagram and wherever you get your information, you know, Twitter, everything, and really focus on what's in front of you. And if you do that, it's a much better place to be. And I just wish that I'd been paying a little bit more attention to my charts, really fading that noise, because all that noise about bearishness and so on is just not really that helpful. Ultimately, you know, the market's going to do what it wants to do. In this instance, as I said, I missed the trade. So let's jump in and have a look, hopefully learn a few things from it. And so this was the market picture I had on the 20th of January. So you can see that the market was pretty much respecting this resistance line here from, you know, the all-time high. It touched another 2 times. And we had this support line here, which was, you know, being respected as well. So I think what most people were expecting, and what I was sort of expecting or hoping for, was that we would, you know, breach this resistance, and that would be a signal that we were ready to, you know, move to the upside. I'll play it forward. That's obviously not what happened. So you can see the first thing that happened is we breached this support. So this was quite a scary candle. You know, it really just free fell from that support line. And as you can see here, there really wasn't much in terms of support underneath it. We had this, you know, trading range from the middle of last year, which, you know, kind of signaled this was where we were pretty much going. So at this point, my expectation was that we could potentially be going down to this, you know, 29.6 level down there somewhere. So we'll just play another. You can see we shoot down again. So again, this is all a bit worrisome. We then have a little bit of a relief bounce, and then this candle. So this was the actual bottom, and obviously at the time that was pretty difficult to ascertain. It was a little bit scary. So this particular push down here was quite scary, because the initial push up looked like we had, you know, potentially made the bottom there. And of course the problem with this whole period is that people are trying to pick the bottom all the way. So here everyone thought that was the bottom, then we recovered, we pulled back a little bit, everyone was like, oh no, this is the bottom, and then it fell. And the other thing was that you had these sort of channels that the market just kept, that's a bit rough, but just kept falling through. And so that's what made this whole decline a little bit scary, because it just seemed to be the market couldn't catch a bid no matter what happened. Now, the interesting thing is, if we go back now at this point and look at it with a little bit clearer eyes, it's obviously much easier in hindsight. You know, it's quite clear that there was a trade to be made here. Now, you wouldn't necessarily know at the time that it was the bottom. If you go into the mindset that, you know, you are taking a trade and you have appropriate risk management, then, you know, it's just another trade. You're not necessarily trying to pick the bottom. But in hindsight, there was a clear opportunity there. And so we'll just run through, you know, what I would have done if I was paying more attention and not getting suckered into all of the bear talk that was in the market at that moment. So looking at our monthly chart, you can see at this pullback in the middle of last year, we had this order block form just here. And so an order block is just a place of supply or demand. So in this case, where the market's pulled back, you get this demand point. So this is an order block here. And, you know, you can mark order blocks in different ways. You can mark them by the wicks or the bodies. I like to do the bodies. And then the same would be on to the upside. You can see is there's another order block just here. So that would be a supply point. So order blocks, supply, demand, they're just interchangeable terms for the similar concept. So you can see we've got this order block here. You can see the market moved into that now. So this is the monthly. And if we zoom in now to go into the weekly time frame, you can see how now within this structure here, there's actually another order block here as well. So there's one just here. And so this is what you can do with order blocks when you're trying to become more precise, is you can drop down into the lower time frames to try and isolate it a bit more. So I generally, you know, work on high time frames, weekly and monthly, and then, you know, use the daily as my trading zone, if you want to call it that, and then I might finesse my entries on the 4 hour. So, basically if you've applied this now, you can see we've got these two zones, these two demand zones, one being the monthly, which is this higher one, and then the lower one being this weekly. And you can see that very neatly, this spike low punctured down into this order block zone, and that would have been our signal to buy. So if we go back to the daily chart now, and we'll just get rid of that monthly, because we're just really looking at the weekly. See, you can see very clearly that demand zone was here, and this low has punctured down into it. Now you can see it actually touches the first time, but what we're looking for in terms of a confirmation that the market is going to reverse here is you want to see the spike low, you want to see a higher close and then a lower close, and that then sets up your entry and your stop. So I'll go through that in a second, but this one did not work. You can see that we had the touch into that zone, we had a higher close, we didn't get a lower close, but then we actually got another spike downwards. And as I said before, this was a little bit scary, that spike down there. And so if we just play forward a little bit, you can see, so we get the confirmation here. So we get, this is the trigger candle, so it pushes down into the demand zone. We get a higher close followed by a lower close. And so this gives us our entry here. So at the high of that candle, and our stop would be down here. And so that's basically the whole trade. So we've got our entry here, and we've got our stop down here. Now, in terms of a take profit, you'd be looking at this other supply zone that we talked about before. So potentially up here. If we go to the weekly, we can see if that is more finite. So yes, we can see here. So yeah, up around this 43 level. So, the trade would be in at 38, potentially out at 43. So, that's quite a good trade. That would be, about 10%. But you can also try and finesse that entry as well. So you can see if we go down to the 4 hour, you can get a slightly more refined entry. So you can still see we've still got this spike low. So that's the lowest low in this movement, a higher close, and then we don't actually get the lower close until here. So this then becomes the trigger here. So rather than the entry being up here, the entry then becomes down here. And so you can see the market would have pulled back and we would have got hit. So would have gone into profit and then back out again, but the stop would be the same. So you can see that just refines the entry a little bit. So you can see, 36,700 versus, 38,800. So that's a fairly significant difference. And that's just a way of fine-tuning that entry a little bit more. It just depends on how you want to trade. So that's generally what I do. I use the upper time frames as like my reference point in terms of what I think the market is going to do. And then I find those order blocks on those time frames, and I come down to the daily to look for my trigger, and then I'll generally use the 4 hour, sometimes even the 1 hour, to try and fine-tune my entry. And so that's what I probably would have done here, as I said, if I hadn't been so scared. So if we zoom back out again and we just play this forward, we can see what the market does in response. So if we'd taken that 4 hour, we would have already been in, but if we'd taken the daily, we would have been in that little bit later. So you can see that would have been hit after this pullback here, and then the market shoots forward. So you can see that in terms of the actual return on that trade, if you'd gotten in right at the on that 4 hour, it would have been almost 20%, and if you got in on the daily, it would have been about 12%. So either way, they're quite good trades. And even if you weren't looking to trade that as a swing trade, if you were looking at a few days, if you wanted to hold it just as a longer entry point, that obviously would have been a great entry point because the market just continued to rally after that point. I hope you enjoyed that review of the trade that could have been, but don't worry, I ended up getting a long position not too long after that. Just wasn't as nice an entry as that one. The lesson out of this is that you really need to fade the noise that you often get confronted with when you're trading in markets. And having a system is really helpful, and if you use that system, rely on that system, it'll help you in difficult periods when it's obviously quite stressful because the market might be moving against you. So I hope you found that helpful. If you did, it'd be great if you could give this video a like. That'll help other people to find it. And if you're enjoying this content, it'd be great if you could subscribe to my channel. I'll see you in the next video.